It's almost a rite of passage to get a credit card. Nothing gives you a more mature feeling than reaching into your wallet and removing a piece of plastic bearing your name. But is creating an account really a smart thing, beyond a transient sense of accomplishment? It depends on how you use it and whether the card you receive is appropriate for your specific requirements. It's a decision that can have long-term repercussions, as many consumers have discovered the hard way. On the other side, if you handle it properly, it will be a crucial step in helping you establish the solid credit history that will eventually allow you to get the best interest rates on the mortgages, auto loans, and numerous other financial products you will require in the future. How do credit cards work? A credit card is a small, rectangular piece of plastic or metal that is issued by a bank or other financial institution and enables its holder to borrow money to pay for products and services at businesses that accept credit cards. Credit cards impose the need that cardholders repay the borrowed funds, plus any applicable interest and any other agreed-upon charges, in full or over time, either by the billing date or at a later date. The credit card issuer may additionally provide cardholders with a separate cash line of credit, LOC, in addition to the usual credit limit, allowing them to borrow money in the form of cash advances that can be accessed through bank teller machines, ATMs, or credit card convenience checks. Compared to transactions that access the primary credit line, such cash advances often have different terms, such as no grace period and higher interest rates. Borrowing caps are typically set by issuers depending on a person's credit score. Credit cards continue to be one of the most widely used payment methods for purchasing goods and services for consumers today, and the vast majority of businesses allow customers to use them to make transactions. Key lessons. Credit cards are plastic or metal cards that are used to pay with credit for goods or services. On purchases made with credit cards, interest is assessed. Stores, banks, and other financial institutions may issue credit cards, which frequently come with benefits like cash back, discounts, and reward miles. Debit cards and secured credit cards are solutions for people with poor or no credit. Knowledge about credit cards. Compared to other consumer loan types, credit cards often have a higher annual percentage rate, APR. Unless there is a 0% APR introductory offer in place for a specific period of time after account opening, interest charges on any unpaid balances charged to the card are typically assessed approximately 1 month after a purchase is made. If prior unpaid balances had been carried forward from a previous month, however, there is no grace period given for new charges. Credit card companies are required by law to provide a grace period of at least 21 days before interest on purchases starts to accumulate. Therefore, wherever possible, paying off obligations before the grace period ends is a smart practice. Knowing whether your issuer accrues interest daily or monthly is also crucial because the former results in larger interest fees for as long as the balance is unpaid. If you want to transfer your credit card balance to a card with a reduced interest rate, it's extremely critical that you understand this. The savings from a lower rate could be offset by accidentally switching from a monthly accrual card to a daily one. People with bad credit histories frequently look for secured credit cards, which demand cash deposits and provide them access to comparable lines of credit. Credit card types. Visa, MasterCard, Discover, and American Express are just a few of the popular credit cards that are often provided by banks, credit unions, or other financial institutions. Many credit cards entice users with rewards like airline miles, hotel stays, gift cards to popular stores, and cash back on purchases. Credit cards of this kind are typically referred to as rewards cards. Numerous national retailers issue branded credit cards with the name of the business prominently displayed on the front to foster client loyalty. Store cards can only be used to make purchases from the issuing merchants, who may provide cardholders with benefits like exclusive discounts, promotional notices, or exclusive deals. Store credit cards are often easier for consumers to qualify for than big credit cards. Large retailers may also provide co-branded credit cards with the major Visa or MasterCard logos that may be used outside of retailer locations. Credit cards that require a security deposit from the cardholder are known as secured cards. These cards provide constrained credit lines with limits equivalent to the security deposits, which are frequently repaid when cardholders use their cards responsibly and repeatedly over time. Those with weak or restricted credit histories typically apply for these cards. Prepaid debit cards are a form of protected payment card, much as secured credit cards, where the available funds are identical to the monies that the cardholder has previously parked in a linked bank account. Unsecured credit cards, in contrast, do not call for collateral or security deposits. Compared to secured cards, These cards typically have bigger credit limits and cheaper interest rates. Establishing credit via credit cards. Regular, non-secured, and secured cards can all help people establish good credit histories when used appropriately. They also give people a method to shop online and get rid of the need to carry cash. Due to the fact that both secured and revolving credit cards send information about payments and purchases to the major credit bureaus, cardholders who use their cards responsibly can increase their credit scores, potentially increase their available credit limits, and in the case of secured cards, possibly upgrade to a regular credit card. Making consistent, on-time payments, avoiding late payments, keeping credit use below your credit limit, and upholding a low debt-to-income ratio are all important components of developing solid credit history. A consumer's credit score will increase as a result of making wise purchases and paying them off on time, making them more appealing to other lenders. If I don't have credit, how can I get a credit card? It might be a bit of a catch-22 to establish credit history. Since you are an unproven borrower if you have no credit, businesses and banks are less likely to provide you credit. One of the simplest ways to begin is to open a secured credit card. There is no danger for the lender because spenders are only borrowing from the money they put down as a deposit, and it gives them an overview of your spending and repayment history. Becoming an authorized user on an established credit account, such as a parent or spouse, is another approach to begin developing credit. Your account will show the cardholder's credit history, giving your credit report more lifespan. But be sure the partner you choose has sound credit practices. Poor financial decisions made by them will also reflect poorly on you. Do credit cards have fixed annual percentage rates, APRs, or variable APRs? There are two types of annual percentage rates on a lot of credit cards, APRs. Read the cardholder agreement that comes with your credit card to learn what kind of APR you have. Legally, credit card companies are required to state the type of APR they have and what it is. They must also inform consumers if a fixed APR changes. Some credit cards feature variable APRs for cash advances and late payments but fixed APRs for purchases. To be certain, read the fine print. What is an annual credit card fee? The charge made by the credit card company to give you a credit card is known as the annual fee. Some credit cards have no annual fee, while others, usually those that offer prizes or incentives like cashback, can levy fees between $50 and $700. For more information similar to this, subscribe to this channel.